Hey everybody, Steve here for the first trading session of 2022. Hope you all had a good new year. So we're going to jump right into it because not a whole lot of stuff really has happened so far. So to begin, a couple of minutes ago, I switched our gold position to a short here. I'm kind of being ad hoc between using either my modified MACD here or my modified oscillator here. We're still in what I would consider to be a short-term uptrend here and a bit of a channel, but we'll see how that goes. In any case, again, as I've said before, I'm not really much of a gold trader. It works a lot more like currencies than most of the other things that I touch. So moving on to the Russell. The Russell is still in an uptrend, so that's fantastic. We are kind of hitting a resistance level here, and that's a pretty solid level going all the way back a couple of months. Looked like it tried to break past that and then came back down towards the end of the session. I haven't been paying attention to the Russell at all until this exact moment, at least since the last video. So, but everything is still telling me that we're still pretty much in an uptrend, at least for now. If we come back down, we might get a little bit of a head and shoulders here, an inverse, which would then be bullish as well. But who knows? I don't really trade off of patterns like that very much. I mean, I like pennants and flags and channels, things like that. But other things, it's kind of not really something that I'm comfortable actually making financial decisions on, so I don't tend to do that. I'm going to move this up just a little bit. We're going to move down to copper now. Copper still in this range here that we've been in for a while now. So our signals are getting kind of mixed here. We've got a cross under here on my oscillator, but we're still pretty flat, and we're still along this support level that I've got marked. So for now, I'm going to keep the position as is. If tomorrow's a red day, then chances are I'm going to be going short. We're still up higher than we were before the massive run-up from last year. Well, from 2020 now. But, you know, we've been in this sort of sideways move here for now for, most of 2021. So we'll see how that goes. If it's red tomorrow, then maybe we'll go short, maybe not. Don't know yet. Haven't decided. Gotta play by ear. Moving on to crude. We are still long. We've got a cross up here in the overbought area. However, this is still what I would consider the breakout area as far as using this oscillator is concerned. As you can see, going from the end of August all the way up through the beginning of November here, we've got a number of crosses here, but if you were to go short on any of those until right about here, then you'd be taking losses all the way up on this massive run-up. Like the very first one happens, it's 69.72 at that close, and then you finally get out and it's 80. That's 80.86, so that's $11 per share, or sorry, per barrel. Used to talking about stocks, but anyway, yeah, no, that's a significant amount of money you would be losing if you were to just automatically start going short up here. Which is part of the reason why I tell people that when I use stuff based off of the stochastics oscillator, I just straight up do not trade it based off of the way that it was initially designed. Like down here, for example, that is a fantastic area to go long. Even waiting for confirmation on the next day, you only miss out on about 80 cents per barrel, so that's not that much of a loss. And then you're holding long for a couple of months straight and making some pretty solid gains. So it's not bad. Even in the choppy territory here, if we were to just use the MACD here, that would still work pretty well. But to be honest, I don't really use the MACD as a swing trading indicator at all. I use it for day trading when I use indicators at all, simply because it just does not react quickly enough, especially during these choppy energy markets. Whereas this oscillator down here, like, yeah, you might get knocked in and out just a little bit, but you're going to be taking small losses in between like heavy hitting gains. Like this is something that I consider to be an acceptable drawback. Um, and if you're using reasonable stop losses, especially based off of support and resistance levels, like on this here, like this moving up, as soon as we start hitting that chop right here, I probably would have set a stop like right around here, which then, yeah, it would have gotten taken out by here, but then I would have immediately gotten back in. So, um, wouldn't have lost all that much. Um, that's like I said, it's what I would consider an acceptable drawback because there's no indicator on this earth that's going to be perfect. Even algos and bots and all that, even the best of them are still not going to be perfect. Generally, a lot of the traders that I know will go for like a 1.5 to 1 risk reward, and when you have that kind of return, anything above 40% accuracy is considered good. Um, and typically, the strategies that I use using my indicators are a little bit better than that. I usually have a range between 45 and about 60%, and my losses tend to be very, very, very small. So you can see, like, whenever I have like it's dropped down, and then there's for like a day, it gets crossed over and whatever. You kind of have to use your judgment, but the losses are going to be minor for the most part. Like, there are no account destroying losses here, at least as long as you're not over trading or something or using way too many contracts. And like I said when I first started making these videos, we're doing one contract per each of these trades, so we can be wrong a pretty significant amount of times, and as long as we play by the rules and do acceptable risk management practices, we're going to be good, not a problem. Moving on to natural gas. So on our last session, I had mentioned how we were kind of still in this little basin here. And after going long, we were doing pretty decently for like a little bit, and then it had this huge drop right here. Well, not enormous, but you know, it's a pretty solid amount. It's a solid like 60 cents from the that little peak there. But we've since started rallying. Our indicators here are both turning bullish now. We're in January, which is usually when I just to reiterate for anybody who hasn't seen the earlier videos with natural gas, my preferred method for entering in is around the middle of summer, around like late July, give or take, is when I usually would like to have my position consolidated. Like, I'll start building up bit by bit by bit through the late spring through the summer, just because that's usually in the time that I've been trading, except for last year. That's usually been the quiet period, and then it would usually rally through August into like September, get really really choppy, and sometimes last all the way up through like the beginning of December. But I'm usually out by then. Whereas, you know, this past year we just had, starting in the spring, just like this huge run up, which is the biggest in the entire time that I've been watching natural gas, which admittedly is not that long. Um, but if we go back by a couple of years, you can see like it's just like this really flat area until the end of July, which is what I just said, and then boom, it goes up, and then in September again it gets really really choppy. So you might layer in and out depending on how your convictions are about how the supply and demand is going to work, macro factors, the EIA reports, how Russia's doing, and all that. Um, but that's a lot more than we're going into with this sort of video, since we're doing entirely the most simple, stupid, idiot-proof indicator-related trading that I can think of. Well, apart from that, the only way I could really get that much simpler is if I was doing just like moving averages or something like that. And moving averages they're fine, I guess, if you just kind of want to keep an eye on the trend over long periods of time. But in general, if you're trying to trade stocks using moving averages, you're not going to beat the market for the most part. Like, if you're doing something like Apple, based off moving averages, yeah, you'll probably beat the S&P with Apple, but buying and holding Apple will also beat the moving averages, and you'll also be much better placed to deal with taxes. So, for the most part with stocks at this point, I don't trade stocks. Like, I pick companies that I like based on their fundamentals and various industry factors, and then I just hold them long term. Um, the only way you're really going to make money, unless you're pretty lucky or extremely talented with trading, is using options and futures, because they're going to be leveraged. That's just how they work. Um, so like whenever people in, new traders in any of the groups that I'm in are asking, like, well, what's the best way to hedge against a decline, my usual go-to isn't to use like a protective put or something like that, because theta decay is just going to kill you if you're wrong. That can be extremely expensive to use any sort of protective put on any sort of large account. What I usually recommend to them is that when they think that a decline is going to happen, and you can use moving average for this if you want, would be on your long portfolio to use like um, micro futures. Just go short a few micro e-minis on the S&P or the Nasdaq if you're particularly tech heavy. There are all kinds of different things you can do. That's part of the reasons why I love trading, is because there's just 1.5 million different strategies that you can make use of in this whole thing. And it's like we used to say at the bike store that I worked at years and years and years ago. There's an ass for every seat. So whatever suits your particular personality, there's probably a strategy that will work for you. Anyway, that's enough of a tangent. So natural gas, we are rallying, still down by $560. Not a big deal, because this thing, when it moves any significant amount, those are big dollars. Really like natural gas. It's a really fun thing to trade. Now we're gonna move on to the bonds now. Bonds have done particularly well. Um, I've been saying for weeks now that I am extremely bearish on treasuries in general. However, we are about to hit this level where we had a double bottom before, and I don't really trade the treasuries all that much. But getting into this whole channel range right here, it's likely going to get extremely choppy. But if we do go below that level, then it's going to be a long way down, and that's going to be quite a big gain for this account. Which, again, it's just a shame it's not real money, because I could use the 21.5 grand. Although we peaked out at about I want to say 23 grand and like $300 at the very highest value since the account change at 59,500. Which was when we were running off of that script that wasn't functioning properly, and then I was like, no, I'm gonna have to actually do this manually, which is kind of funny considering the name of this whole project is the automated trading thing. But I mean, it's automated considering I'm basically just going off of oscillators and MACD here, so just indicators in general. Moving on, silver, another one that has kind of started to fall down. We do have a cross under here. However, it has not closed across under, so I'm going to hold for now. Silver functions really similar to gold in a lot of ways. However, I really like it a lot better for swing trading. It's a lot more fluid. The trends are a lot easier to kind of capture for my style of trading, which is extremely directional. I don't do well in sideways markets, but for directional trading, like, these kinds of moves are just fantastic. Like, over the courses of weeks and hopefully months, you can make a ton of money if you have the right amount of entry skill and luck. So if it has a red day tomorrow, good chance that we will start going short. Silver's been pretty good for a while now. I remember the first time that I made a really good trade on silver, it was like 16.5, which was a couple of years ago. I don't think it was 2020, I think it was 2019. Yes, this is the exact area where it was about 16.5, and I was telling people, like, I considered this to sort of look like a consolidation period before another leg up, and then over the next couple weeks it shot up, and I sold when it was around like I distinctly remember it being in the like 24.5 range, but of course I was looking at SLV, so I don't remember off the top of my head how much that actively tracks, but I don't know. I mean, was that 2019 or 2020? I really don't remember. But I distinctly remember getting in around the 1650 level, so it actually might have been here. Um, yeah, no, I think it actually was here because I remember kicking myself that I didn't start loading up on SLV down here. Uh, Especially considering like I've been pretty much using this oscillator for a few years now, and it would have been like, hey, Steve, totally buy here because good things are going to happen. Although actually, this crossover out of the oversold area would have immediately kicked my ass. But if I was holding just some call options, which is what I did, then it wouldn't have been too bad. Because I always enter options trades with the assumption that any of my long options are going to go to zero. That's my risk management. That I just choose what's the most I'm willing to lose if I'm wrong, and that's how I make my decisions on those. Because with all the Greeks, it's hard to keep a prediction anywhere near what you think it's going to be a lot of the time. And last but not least, the S&P, which has been in a sideways range for a few days now. Going to move back over to the 8-hour because that's what I look at this thing on. So the S&P was pretty good for me today when I was day trading on my live account. I made 4 trades. 5 trades. One of them I lost. I was I was using a trailing stop on the overnight, and it knocked me out by 1 tick because I had a 5-point trailing stop. So I at one point theoretically made 4 3/4 points, and then went and then lost my $12.50 plus commission and clearing fees. Fantastic for me, but it's fine. But then I got up and I made a few trades, and then I ended up coming back out. Just a few scalps. I came out with I think around 6 or 7 points, somewhere around there. So not a big deal, but any gain's a good gain. Although we did have some pretty wide swings here, so I'm going to switch down for just a little bit. 30 minutes. Yeah, so, and I've mentioned before, I like using volume tick charts. Although I've been thinking about experimenting with Renko charts for a little bit, but I still don't really have any experience with using those, so I don't really want to use live money on them or whatever. But, so anyway, yeah, we had a pretty solid move in the early morning. So, like, if you were one of those people who has insomnia and just kind of looks at the market at 4 a.m., then, well, fantastic for you, because that was a solid, like, 20-point move there. And then swinging all the way down. And this is a huge, I don't know if you'd call that a pinwheel, because it's super, super thick on the actual candle portion, but the wicks are still pretty wide. So the low 47.47, the high 47.86. That is pretty wide. So using a volume tick chart, I'm gonna move to 3 minutes there. Like the huge swing here, I remember it started at I went short at like 9:45 and then was long again at around I want to say 7 or 8 minutes later. And yeah, so I of course my problem was that I was using some extremely tight take profits because of the Friday session, which, if any of you were trading that, it was like, for most part, it was like super, super sideways and choppy all day. And I was like, well, it's the first trading session of the new year, so I don't know if, a lot of people are going to be back from vacation or whatever, even though financiers, traders, and all that are usually back. Because, the markets don't wait and the world doesn't follow all the same holidays we do. But, yeah, no, I completely underestimated exactly how much volume was going to be going into this, which you can see on the volume profile here. We had a lot of high value nodes here. Pretty much, yeah, the volume pretty much just completely dried up once it got down to this level, and then bounced back, and then it was a if I had actually been at my computer for most of the day and trading and all that, I was busy with other things, but this would have been a fantastic opportunity. These are the kinds of days when day traders are extremely happy people, because even using indicators and stuff, like, you'd be really choppy at the very beginning, but then, like, for example, this MACD cross here, you'd be going long at 47.61, and then you wouldn't be getting out until 47.82, and it's 20 points, and you literally do not do any work. So you really can't hope for many days better than that if you're a really lazy trader. Anyway, I have rambled enough. So to recap, we did that one change on gold. We might be changing on silver. We are still down on natural gas, but I don't see any reason to fix that just yet. Currently sitting up at $21,500 of gains, and we'll see where the new year gets us. Anyway, hope you guys have a good one.